S&P 500, Dow Jones and NASDAQ all hit record highs. A bearish divergence, however, is still present on stocks versus the high-yield bonds, junk debt. And if you're a subscriber, stay tuned. I will also talk about how market breadth is divergent currently from the stocks, also in a bearish way. However, if you're a subscriber, congratulations to you. If you have opened Nvidia in like October of last year, it's up 170% since the alert was sent. And gold does look vulnerable as dollar is strengthening. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, January 19th, 2024. As always, please keep those likes, those shares, and the comments going. This is what keeps this channel going. Thank you very much for them. Again, I really appreciate you guys leaving any comments. And if you have any questions, please don't hesitate to ask them in the description of the video below, in the comments below. If you're a subscriber, stay tuned. We have quite a bit of stocks to cover. Market breadth is going to be covered in the members only video. Bitcoin and natural gas also is going to be there. Lots of various ETFs, large cap stocks such as Honeywell, as well as travelers. Big congratulations if you have opened it recently. Also, we have quite a bit of various small caps and various speculative investments such as C4 Therapeutics, as well as Rush Street Interactives and Markforged, amongst others. So again, stay tuned. As always, throughout the presentation, I'll be using this proprietary MasterChartsTrading.com price action indicators. You can see them on this chart. It's this green, blue, red, and yellow lines. They're used for support and resistance trading, and they're available for tradingview.com. So once you sign up on tradingview.com, come back to my site, Master Charts Trading, sign up there, and I will open the door for you on TradingView. Yearly prices are now available. There's a significant discount versus the monthly prices, so sign up if you are interested. There is always a trial. Currently, we're looking at S&P 500, and notice this candlestick today. We are at new all-time highs. This is a very bullish behavior. Obviously, there is no questions about it. Record highs, 52-week highs are obviously signs of a bullish behavior for a security. Notice this white line with circles on it. So on the 3rd of January, beginning of this year, I kind of plotted it in, and I predicted that we are going to hit record highs. I just didn't know we were going to hit them this soon. I thought we were going to wait until the end of the month. But then afterwards, I think we will pull back. And I think the pullback target, notice this gap here between November 13th and November 14th. That's a very good target for a gap, or rather for a pullback. There it is. And coincidentally or not, this area is also where my blue line is coming right now. I can turn on the moving average. So for example, this is a 200-day moving average, and notice that it is also coming around the same area. So I think unless we just skyrocket higher, I think a pullback is likely, and I will show you the reason why I think it's likely is because there is already a divergence between high yield bonds and stocks, and in a few seconds I'll get to it, but for now let's just revel in this beautiful breakout towards new records. Here it is on the weekly charts. I'm going to turn off my indicators for a little while. There it is on the weekly charts, and you can see we have made a new high versus last year's, literally January 2022. We're now making, I'm sorry, a year before that, January 2022, we're now making new records, and that's an all-time high. So for now, let the party continue, I guess is the word. Just briefly, let's look at Dow Jones. Dow Jones also hit all-time highs. There it is, record highs today. So actually Dow Jones was hitting record highs for a while now. You can see the previous high from 3rd of January 2022 was overcome actually last year in November, and today we again hit new all-time highs. So overall, no divergence between S&P and large caps. QQQ, the NASDAQ 100 ETF, has also hit new records, has been hitting new records actually also since mid-December of last year, and today continued higher on the heels of a major breakout by semiconductors. Here's semiconductors, SOX, there's a new record high right there in a very convincing manner, obviously. So for now, looking good, especially with large cap stocks, and technology stocks are definitely propelling the markets higher. Small caps are lagging slightly, but I don't know how important that is, and perhaps that's the reason why market breadth is also diverging, and I will talk about this in the members only section. So if you're not member, sign up on my site. Let's look at high yield bonds. Well, before we do that, let's look at Nvidia. So Nvidia obviously is a part of NASDAQ, and Nvidia alert was sent out to my subscribers. There it is, an actual alert back in February of 2023. So my trades, they don't necessarily, have any time frames, time parameters. Sometimes the target gets, quickly we get to the target and then we get stopped out. But sometimes you get this enormous moves, and honestly, this trade was not stopped out. So notice alert was sent back here in February of 2023, so almost a year ago. How do I know? What was my trigger, at the time? So let's just go back to the, exactly a year ago and what we were looking at. So notice that Nvidia at the time was trading in December of 2022 here. Nvidia was actually trading below the yellow line, and then it started moving higher. So when we see a close above the blue line, we are saying that we're now in an uptrend. We can also turn on the moving average. So here's a 200-day moving average. So yes, you can use it. I prefer to use my indicators because it has in my opinion, has a better success rate than a moving averages. But I'm just showing them to you because some people say that, oh, it's just moving averages. My indicators are moving average. No, they're not. So alert was sent back here in February 2023, and it hasn't been stopped out. So our target right there was reached in a few weeks later. And notice that I would have trailed at the blue line itself. So notice that we never touched this blue line. You see? So it just keeps going, and it hasn't actually touched the blue line since. And notice we're at new all-time highs. So if you're a long-term person who holds stocks for a long term, you could have easily made this transaction work. So notice again, alert was sent back in February of 2023. We're now in January of 2024, and we're still going with a 168% gain. It was sent back in February of 2023 at $217, currently at $591. Clean, nice, beautiful move higher. So again, if you are a subscriber, congratulations, and hopefully this continues. It's not impossible. So now I want to look at high yield bonds. So to be abundantly clear, high yield bonds are also in an uptrend, and in fact alert was sent for my subscribers to buy them, buy high yield bonds here in October of 2023. It's pretty obvious if you just look at this chart. So what was happening here? So sometime back in September of 2023, this security, high yield bonds, JNK, was already trading above the blue line. In fact, it was above the green line. And so it started to pull back into September, October of 2023. And then notice how where I'm hovering, it kind of bottomed around the blue line and then closed above it. So that was actually my trigger. We need the low below the blue, a close above the blue, or a close below the blue and a close above the blue. So it as long as there is a low below the blue, and then sometime later, not necessarily the same day, but a few days later, a few weeks later, we close above the blue, we're good. This is our trigger. So alert was actually sent back here in October of 2023. It was a very nice move by the high yield bonds. You know, for high yield bonds, they moved close to 10%. That's a pretty nice move right there. Why do I care about high yield bonds? So high yield bonds and stocks, this is JNK on weekly time frame, just a very long time frame. Notice the correlation coefficient here below the chart in yellow. Notice that correlation is very high between S&P 500 and high yield bonds. So when stocks and bonds, when stocks and high yield bonds, junk bonds are moving together in lockstep, I'm happy. However, a little bit, you know, a few weeks prior to today, here back in late December of 2023, notice that the high yield bonds made a new high. S&P 500 also made a high at the time. Okay, so no divergence at that point. Okay, then we started to pull back, and notice right there where I'm hovering on the 12th of January. 12th of January, the high yield bonds did not make a new high. So let's look at S&P 500. Yes, on 12th of January, S&P 500 made a new high. And again, today, S&P made a new high. But notice that high yield bonds did not. So this is what's called a bearish divergence. We have one security which are highly correlated. These two securities are highly correlated. They move together in lockstep. But for some reason, they're not. And in fact, high yield bonds are sort of dragging. Now, I like to give benefit of a doubt to high yield bonds. I think, if you can say them, smarter people trade them. You know, high yield bonds are traded by very professional investors for professional, holding organizations. S&P 500 is pretty much traded by everybody. So notice that we have a new high for S&P. We don't have a new high for JNK yet. How much does it matter? So in my mind, it does matter. And, you know, if you're a subscriber, again, I will talk about market breadth analysis. And there is a similar kind of divergence that is showing up between market breadths and high yield bonds. So I think that my projection is probably still going to be correct. We might, make another, a few highs here, but I think the pullback is quite likely. And as I said, a target for a pullback is around the blue line and this gap. So for S&P 500, the pullback from today's levels of about 7 to 8% would be not unreasonable at all. So I think we should be on the lookout for at least a corrective action, possibly sideways or possibly down into March, April of this year. Nothing is set in stone, obviously, but it's quite likely, in my opinion, because of the market breadth divergence and divergence between it and high yield bonds. Let's move on and quickly look at some of the securities we also trade. Here's DXY, dollar currency index. So dollar currency index made a low here back in December of last year and has been sort of rising since. So new uptrend, or it's currently in a downtrend for sure. Okay, because we have a new low. We also have this close below the red line where I'm hovering on December 14th, and this in my book means it's now in a downtrend. It is currently approaching a new uptrend. So it looks like we had at least one whipsaw right there on the 26th of October, where I thought that yes, we're going to be going higher, but actually indeed we're going lower. Another this potential trade back here on 14th of December, you could have made some money. You could have made this trade work if you shorted it on the 14th of December and at least took profits back here on the 27th, 28th of December, and then got stopped out back here, again around January, beginning of January. So not technically a whipsaw. This down alert was correct, but it just was very short-lived so far. So we're at this point where we're trying to see, are we going to go higher for dollar or lower? And I think, higher is if we go higher by about a percentage point, we will re-enter a new uptrend for the dollar. Why do I care about the dollar? Is because when we trade gold, notice this is gold divided by US dollar. So if the bottom part of this equation, US dollar, so US dollar is getting bigger, stronger, okay? This equation, gold divided by US dollar, will be moving lower because dollar will pull this currency pair lower. It's getting bigger and it will pull this currency pair lower. So first, on this chart of gold, we have big potential rejection candle right there on the 4th of December. Rejection of higher prices. You can see the prices came up, but were really strongly sold off. Another attempt to go higher on the 20th of December so far has failed. And finally, we have now a potential breakdown below this blue support resistance line on the 17th of January and a feeble attempt to recapture it so far. So we're looking to see if dollar will strengthen even a little bit further. I think if it does strengthen a little bit further, gold will come under pressure. So will gold come under pressure? What do you guys think again? I am honestly not 100% about gold and dollar currently, and I'm sort of just staying out of those trades for now to see. It's probably best for me to just kind of look and not trade currently the dollar versus gold relationships, because it's not very clear, to tell you the truth. So if if the dollar continues to rally, gold will come under pressure. And then if it breaks below this red line, which is currently at 1933, gold is currently at around 2000. So if it breaks down a little bit lower, we will consider selling gold short. But for now, I'm just not sure where this is all going. I'm just watching it. I've been watching it sort of since this big rejection candle on the 4th of December. And let's see where it gets us. Okay, that's it for this week's recap. Head over to masterchartstrading.com. Notice that I have added I have added a yearly subscription. So finally, I have yearly subscription for the indicators, yearly subscription for the newsletters, and both indicators and newsletters. So you actually save substantial amount of money. You save about 17% with yearly subscriptions. And as always, you get free 7-day trial. What do you get for trading indicators? Obviously, you get these trading indicators. I'm talking about this green, blue, red, and yellow lines, and you can pretty much trade anything under the sun with those indicators. If you're not really interested in indicators, you can also get my newsletters where I send out daily alerts about various securities that we trade. So for example, in a week, and also I send out a weekly members only video, and you can see that there's quite a bit of stocks we're going to cover in this video that's coming up. Of course, the best deal is to get both indicators and newsletters, and I think at $49.95 per month with a yearly subscription, I think it's a very good price. And once again, you always get a free 7-day trial. That's it for this week's recap. Please don't forget to hit the like button, subscribe to this channel, share this video. If you have any questions or comments, make a comment. Thank you for watching and have another great trading week. Bye-bye.